Good morning, everybody. This is the live market open for Thursday, November 26th. I'm Yohay, Elam of Forex Crunch and Market Movers podcast, and doing the show for FX Street like every morning. Today, we have a relatively quiet day, but we had lots of stuff going on yesterday and lots of action. We'll talk about that, and of course, what's ahead, and of course, your questions, the most important thing. If you can't see the chat under the video, please go to tlk.io/fx-forex-live-video or the address on the screen. So what did we have yesterday? Most importantly, we had the euro falling, and now it's resuming a bit its falls. And why did it fall? We had lots of rumors about the ECB. Okay, the European Central Bank released, some people there spoke with Reuters, and Reuters interestingly had another poll the same day. So what did we hear from the ECB according to Reuters? We heard that they're considering, the European Central Bank is considering a two-tiered negative deposit rate. That means banks will be punished for a bit by paying deposit rate, interest rate for parking money with the ECB, and an even higher penalty, if you wish, higher, more interest rate for parking even more money. Okay, and no numbers were given. They're considering broadening quantitative easing, means buying different sorts of bonds, including municipal bonds, perhaps corporate bonds, not only current government bonds. Also regarding this, we didn't have any numbers. Okay, what else did we have on the agenda? We had also, we know that there isn't a clear consensus. Okay, they're not really sure about what they're going to do. Okay, this also yesterday, a very busy day, we had Reuters release a report, a poll of economists about what they expect from the ECB. So first of all, a number I didn't put here is that only 80% expect the ECB to act. I mean, the vast majority, yes, but 20% don't think the ECB will act. Okay, because euro dollar is low, because the Fed is about to raise rates, etc. Anyway, 80% do think they'll act, and they only see a drop of the negative deposit rate to minus 0.30 from currently minus 0.20, and QE, the monthly buys, the volume, to rise from 60 billion at the moment to 75 billion. Okay. Remember what we had in January. We had rumors, we had expectations that were at a certain level, and then Mario Draghi surprised us with going further than that. So, of course, there will be lots of news, information, misinformation, rumors until towards the big event, which is 1 week from now, on December 3rd. Currently, these are the expectations, and I believe he'll surpass them. Anyway, when some kind of details emerged from the ECB, we had euro-dollar fall. Let's look at the chart. We had this big fall. Remember yesterday during the show, these rumors came out just after the show ended. We had euro-dollar getting even close to 107.10, which was resistance. Anyway, we had a sharp drop. Well, not that sharp, actually. I mean, big drop, but it lasted quite a few hours. So we had it fall from around 100 pips, and then extending its lows later on the US news. The new low we reached is 105.68. Anyway, that's a new low. Initially, we broke under the previous low of 105.90. Broke under 106. Since then, we had a recovery due to some mixed US figures, and also okay, here we have 105.66, and also some profit taking. Of course, it's never a one-way street, right? Anyway, we didn't have a big recovery. We only temporarily breached 106.30, which was the previous support line, and basically the pair is still in a lower range, and I see it as vulnerable. I see a question from Fabian. Good morning, about euro-dollar, so we'll talk about that. Good morning. Hi. Yesterday, just after the webinar, euro-dollar started to sell off down to 105.70 for apparently no reason. There were no news on the calendar. What happened? Then, despite of the good figures from the United States, here was good, or yeah, dollar sold off, and after a fake break, euro dollar rallied again for no reason, perhaps locking in profits before Thanksgiving, but it's enough for such a euro dollar 76 boom. Yeah, so first of all, I think regarding the first part of your question, I guess I answered it now by explaining what we had yesterday during the European session. US news was mixed. We'll talk about that shortly. It wasn't all good, okay? And then, yeah, I believe we had some not only bad mixed US news, but also some profit taking ahead of Thanksgiving. Luckily, just before the show, euro dollar began moving again, so it's not totally dead on Thanksgiving Day. European markets are still open, so at least we have this kind of small fall in euro dollar, some kind of action. Now, let's talk about US news. We had a lot of them yesterday. Here are the US developments. We had durable goods orders coming out better than expected at 3%. Core orders at 0.5%, and all these figures came on top of upwards revisions. Okay, so the area of the durable goods orders, it's all good. Okay. The second in line, second of importance, is the core PCE price index, the Fed's favorite inflation figure, and that disappointed just a bit because it didn't rise. It got stuck once again at 1.3% year over year. So this is, if you wish, the core of inflation figures, and it didn't go anywhere fast. Okay. The third in line, according to my ranking, of course, in US news yesterday, was jobless claims. It beat with 260,000. Really good news, encouraging towards the non-farm payrolls next week. Okay, that was all at 1:30 GMT. We also had personal income and personal spending, and then we had new home sales at 3 GMT. They came out with a very small miss, 495,000. I would say within expectations, but we had the consumer sentiment from the University of Michigan, the final one, revised to the downside, revised from 93.1 to 91.3. Yeah, so this was a bit more mixed. Okay, so we had good durables, good jobless claims, okay new home sales, mediocre core PCE price index, and disappointing consumer sentiment. So my take was it's good enough for a rate hike. Okay, nothing changes in this aspect. We can see the updated figures for the implied probability. They stayed more or less the same, 77.5 chance for 50 basis points. That means extremely high chance of rate hike according to bond markets, and also according to economists, of course. So this doesn't change. It doesn't change the picture for the US dollar. But it wasn't overwhelmingly strong, and it still allowed taking some profits. Okay, so it was mostly positive, good enough, but not extremely well. Okay, so these were the US developments, which were quite busy. Today, Americans are on holiday. It's Thanksgiving. It's a family gathering. People are eating turkey and things like that with their families. Of course, in recent years, because of Black Friday that begins earlier, people finish eating and immediately rush to stores. I mean, some of them. And of course, you can do shopping online. So what this means for today is that after the European session, which is already a bit slower than usual, we'll have a quiet session. Okay. Let's talk a bit maybe about this Thanksgiving trading, which is a nice prelude for Christmas trading. So we have American session today is going to be very quiet. That means volume is low, liquidity is low. It means if someone decides to buy something or sell, there's going to be an air pocket over there. So we could see extreme moves. You could see technical lines being broken very, very easily, only to be retraced shortly afterwards. Okay, that happens sometimes. Last year in this period, we had the OPEC meeting. OPEC decided not to cut production of oil. Oil prices tumbled down, and the thin liquidity in markets exacerbated the moves, and they became very extreme. Okay, nothing special is expected, but you never know. You had these rumors yesterday from the ECB. You had 2 days ago the Turks downing a Russian plane. You have articles coming out, interviews, and unknown unknowns, as they say. So in general, we should see sort of this flat lining of boring market moves. But there is a chance that if we do have some news coming out, we might see something extreme. Tomorrow, markets are open, but liquidity is thin. Trading volume is thin. We do have some events tomorrow, but more than today. But and some US traders are back to business, but it's still sort of a muted action. Okay. So what does happen afterwards on Monday? US traders come back, and volume is high, and we could see lots of action on Monday because of these days of rest, because of this long weekend of 4 days for most people. And also for stock markets, it's a time when people digest the results for Black Friday, Cyber Monday, and what have yous. So you could also see some focus in the stock markets about that. I'm not sure it'll have an impact on currencies. Okay, I see we have a question from Alexei. Good morning. Not only the continues, but the initial, initial jobless claims was very good. I think it seems that the US economy is recovering very good, actually. If we see that the durable goods were a lot positive, which means among other figures, persistent orders along some time. Yeah, and a good point here, Alexei, because durables goods orders, they reflect investment, they reflect things towards the future, and durables goods orders throughout the year were mostly disappointing. I remember writing an article, another one about how durables goods orders came out worse than expected, and this time it's good news. Okay, so as you mentioned, that's of course positive news. What else did we have yesterday? We had news also outside the United States. Okay, we had in the United Kingdom, we had the autumn statement coming out from the government. Chancellor of the Exchequer, George Osborne, spoke. He removed one of the welfare cuts, which was deemed as cruel and got lots of criticism. That didn't influence markets, but directly. But in general, he was more upbeat on the economy. He didn't see a need to be so austere, and I think this sort of better mood helped the British pound recover. We talked yesterday, now it's falling once again, but I was talking yesterday that the move downwards is unjustified, and the Bank of England is seeing the glass half empty, if you wish. So we did see some kind of recovery. Currently at 151, I see, some kind of, it's more like a pivotal line there, but it was a clear separator of ranges on so far 151.15. I would say to the downside we have 150.60, more or less, on the higher above 151.60 and 152. So that helped the British pound recover. Also against the euro, we've seen strong moves. Well, this is the fall of the euro. And now the 70.22 line I was talking about, which was very nice resistance and beforehand support. Now it's a bit sort of shattered from all directions. So on euro pound, we'll have to look at different levels. Maybe this one is a better one. Yeah, 70.40 looks like a nicer level for resistance. 69.80 is support on euro pound. So that's what happened yesterday in the United Kingdom. Late at night yesterday, we had New Zealand trade balance showed another big deficit. Not as bad as expected, but quite a high deficit. New Zealand dollar, is grinding its way up. I see resistance at 66.15 and support at 65.10. And what we had yesterday, more impacting, is In Australia, capital expenditure dropped by 9.2%, a very big disappointment, and it hurt the Australian dollar. Didn't kill it, but remember, this is a figure that the RBA looks at, so we had it fall. Still struggling with the 72.20 line, which is also beginning to be shattered. We reached resistance yesterday at 72.80, and now we're seeing it fall. Because we talked about investment of durable goods orders, following the question from the comment from Alexei. So also in Australia, this figure is important for the future. And I was talking in previous shows about how Australia is looking better with the good jobs report and an RBA that doesn't seem to understand, or not to understand, which wants to help the economy but says another rate cut will not help. This perhaps gives it more reasons to be worried. Anyway, we're currently a bit more stuck in range. I believe that if the Aussie dollar will rise too much, the RBA could intervene verbally with talking about cuts and eventually cutting. But if it remains at these kind of levels or even lower, they will not act. So they depend a lot on the exchange rate. Okay. So these are the events we had yesterday. Today, very, very light calendar, as I mentioned. At 9 GMT, just after the show, we have Eurozone monetary data. We have data from regarding private loans, money supply. The ECB watches this closely. The ECB did see some fruit here. It saw some, first of all, in loans. Loans were terrible. We have the chart. Yeah, the loans were negative. Actually, there was a squeeze in the amount of loans that the economy has seen. And thanks to the ECB's actions, perhaps other things as well, but there's just more money in circulation and therefore more economic activity. And regarding M3 money supply, that's exactly loans. That's exactly money in circulation. So also here we've seen a fall, and now we've seen a rise. Currently at around 5%, expected to remain more or less the same. But unless we have huge surprises, these are not figures that usually move markets too much. Okay, at 12 GMT, we have the German GfK consumer sentiment. Right here, expected to, well, it did rise, sort of edge up quite nicely, but now it's dropping a bit in recent months. It peaked out. Now it's expected to fall a bit further from 9.4 to 9.2. Okay. Again, not a first-tier figure. Could move the euro just a bit. And on the other side of the day, we have Japanese inflation data. This is already important. For those of you trading the Japanese yen, it implies if the Bank of Japan will act further or not. Lots of figures from Japan at the same time. The ones to watch are the Tokyo CPI, the core Tokyo CPI. The Tokyo figure is for November, so it's fresh data. So I would say this one is of importance because it excludes food and energy, and it's a year-over-year figure, and it's for November. But it's also worth watching the Tokyo CPI in general, or this one excluding fresh food as well. It's a bit confusing if we have, like I say every time, if all the figures go in the same direction, it's a clear cut. If not, it isn't. Let's just look at dollar yen. We haven't looked at this one. So dollar yen fell to support yesterday at 122.20. Very nice double bottom here on dollar yen. We've seen this 122.20 back on November 16th, 10 days ago, and now we're seeing it once again, rising back up. 122.80 is some kind of weak resistance. 123.20 and 123.60 is strong resistance. See a question from Alexei, another one. Very hard to believe that the euro will recover soon, even during the Q1, the first quarter. If we take into consideration the rate hike by the Fed in December and the coming NFP, if we further take into consideration that the initial jobless claims will be less, and still in Europe, we're expecting more easing during 2016. The only reason I see the euro recovers mainly in corrections. Yeah, due to the fact that no news in the United States market tends to be good news for the euro. Yeah, my point. Yeah, fundamentals. And we have another comment from Fabian. I agree, but then I didn't get why the U.S. economy, the positive recovery news didn't move euro dollar more down, instead allowed it to bounce. Yeah, profit taking. So I'll answer first question from Fabian because regarding the US news, first of all, the first bulk of releases was positive. That's right. Okay, so we did see an extension of the move, and even with the second round of news, with the new home sales at 3 GMT, we did see a bit further. I think that's when we saw the very low in euro dollar. Despite mediocre news, as we've said in the past many times, okay news is good enough. And with this, 3 GMT, if you can see it here on the screen, that's when we hit the lows on euro dollar yesterday. Okay, but from then we had a bounce, squaring positions towards Thanksgiving. One reason. Also, taking some profits after the big move. Now, regarding the question from Alexei, yeah, it's hard to see the euro dollar recovering. The pressure is on. Next week is a very busy week. Next week, we'll do a full preview Friday, tomorrow. But next week, we have the ECB decision. I believe this will be a big blow for the euro because Draghi has a tendency to surprise, to under-promise and over-deliver. On the same day, we have Janet Yellen speaking, testifying. I think she'll provide another hint that they're going to hike. She will probably have the non-farm payrolls figures in front of her eyes. We have the NFP on Friday. I'm not sure. I don't think it'll be as good as we had it last month, but it could be just good enough to support a rate hike. So next week could be really bad for the euro. But of course, it's never, as you said, never one-way street. There's always corrections. Okay. Now, also with the Fed, I believe we'll have euro dollar falling a bit more, but this is much more priced in my opinion, than what's going on with with the ECB decision. And so I believe it'll hurt euro dollar, strengthen the US dollar across the board. It's not fully priced in, but I think that after a while we could see, after the cat is out of the sack, after the United States raises interest rates for the first time in 9 years, and the world doesn't collapse, then markets will begin. They're already beginning to think beyond the first rate hike, to think, well, if we have a rate hike and the Fed tells us it's gradual, maybe we should start listening to the Fed. Maybe we should really calculate the graduality. Okay, now it's unclear if gradual moves means moving only once per quarter. That means once every other meeting. Another 100 basis points in 2016. It'll be, of course, data dependent. It'll be maybe sometimes 2 moves in a row, sometimes 3 decisions without a hike. There's going to be speculation in markets, and speculation favors the US dollar. But there's going to be a belief that it's not as bad as we thought. In the past, we had the US dollar beginning to weaken after the Fed began the tightening cycle, because markets move more because of expectations, and when expectations change, they move more. Okay, so that's why I think that euro dollar has more potential to the downside, more on the ECB than on the Fed. And at some point, perhaps in the first quarter, perhaps in the second quarter of 2016, we could see the US dollar reverse some of its gains, begin losing ground. I see another question from you. Don't you think that this was just a sudden move to catch stops before going out? Yeah, it could have been some. Which move? Sorry, which move did you refer to? The bounce back in euro dollar. I see that as catch some profits, catch some stops before going out on holiday. The trend remains down, if that was what you were referring to. Okay. So that's anyway, levels near dollar. 105.90, I think it isn't that strong anymore. 105.66 is support. 106.30, I still see it as resistance, weaker than beforehand. Further support, I mentioned this a few times in the past, it's 105.30 because that was a low back here in April. And the really critical support line is at 104.60. Okay. Most probably, my base scenario for today is that we will not see anything happening. Okay. Perhaps I'm not supposed to say that, but I'm afraid we're going to have a bit of boredom today. I'll be very happy and very surprised if we have action today because it's Thanksgiving Day on surprising liquidity moves, but thin liquidity and some news coming out. But I don't think we'll actually see that. But tomorrow and especially next week, we'll have lots of action and perhaps we'll be able to challenge the lows. But remember, it's never a one-way street. We had all these corrections. You can look at the trend. The trend is clear to the downside, but we have each time these sort of rising here up the elevator, some range trading here, this bounce back up. So it's never a one-way street in Forex. Okay. When you said that the pair moved down after the second wave US news, yeah, oh yeah, it could have been taking more stops, cleaning them up, stop hunting, as Dale Pinkert says, and yeah, and then we've seen a bounce back up. So yeah, the fundamentals point down, but that was a chance for a reversal yesterday. Okay. What else do we have on our agenda? Perhaps a few more currency pairs. Dollar CAD is off the highs. We are seeing oil prices rise a bit. So first of all, let's look at oil prices. Oil prices, well, made a break above this 42.70 level, reached 43.40, but then went back down in the previous range. Now we're again back up. 42.70 to 43.40 is the current range. What we had this week in oil prices is the Saudis talking about coordinating production, perhaps cutting production together with OPEC and, more importantly, non-OPEC members such as Russia, and Mexico, Nigeria, Norway. They want to get support from everybody. We know that the Saudis are a bit in stress because there's some infighting within the royal family, and the low price of oil means that they can't continue burning cash quite easily forever. So we've seen this rise in oil prices. I have lots of doubts if they can really cut production. There is this kind of race to maintain market share. Iran is going to come back online soon because of the lifting of the sanctions. So I don't see oil prices totally collapse, but not this kind of higher level is limited in my opinion. But nevertheless, it helps the Canadian dollar recover. Nice support here at 132.80, currently above this level at 133.15. Further resistance at 133.70, and most important resistance line is 134.60. Okay, more to the downside 132.40 and 131.80. Okay, we talked about the Aussie, talked about the Kiwi. Dollar Swiss yesterday reached a new high because of the weakness of the euro. Remember, it's always trading in tandem because of the Swiss National Bank. It reached 102.60, and now because of this profit taking in euro dollar, we're seeing it a bit lower, but all in all, it's trading higher. If you look at euro Swiss, very, very stable right here, 108.50, being pushed higher by the ECB, by the Swiss National Bank. Talked about euro pound. Euro yen dropped below 130 yesterday. Not across, I heard many traders trade, but nevertheless, these are two important currencies. currently just kissing the 130 level. Let's add another line here on the downside to 129.75 was the low. Currently the range 130 to 130.60. Geppy, the dragon, favorite pair, dipped, made a false dip. Well, perhaps no. Let's change the lines here. This looks better. This looks like a double bottom at 184.30. Okay, on pound yen, 184.30 now turns into double bottom. My line beforehand was 184.50. Anyway, 184.30 to 186, the round number, is the current range. We had 186 here as support, and here is resistance. It's a round number. We've seen that false break above 188.10, which was the high in September, and I believe the pair has more potential to the upside, but there's a reason they call it the dragon. It's a bit wild. Okay, and let's see where it goes next. Any more questions? Yesterday I promised a preview of the ECB, and they really published it on Forex Crunch. I'm gonna talk about the ECB, of course, for the next week or so. I'm gonna have more rumors, more events, more stuff going on. As I said, I think they'll be relatively bearish. Currently, euro-dollar 106.05, extending its small slide earlier today. The low so far has been 106.02, so we're relatively close to these lows, but the moves are quite limited. The range for today has been so far, something like 25 pips, which is quite normal for Thanksgiving trading. We have 105.66 as the swing low and 106.30 as resistance. More questions? Let's recap the events of the week. We're close to the end of the week. On Monday, we had Eurozone PMIs. They came out better than expected. They temporarily supported the euro, especially the news from Germany. This was compounded by a strong German IFO figure on Tuesday, also showing more upbeat sentiment among German businesses. Okay, but this helped the euro only so much because the euro moves more to the flute of the ECB than to German figures at this time. On Monday, we had existing home sales, which were okay, a bit under expectations. That's exactly what we had also yesterday with new home sales. They were only a bit under expectations. We had GDP coming out in the United States, second release, upgraded from 1.5 to 2.1 as expected. Consumer confidence, disappointing in the CB consumer confidence on Tuesday, and also later on the on yesterday's consumer confidence. Yesterday we had durables goods orders, which came out much better than expected, and this was really the best part of the news yesterday. Also, jobless claims came out better than expected, but for the Fed, the core PCE price index was very mediocre. Okay, today we don't have any major events, only minor ones, which we spoke about before. Tomorrow we have the second release of UK GDP and also some other figures. It's not as sparse as today, so we're expecting more action tomorrow. A question from Fabian about, do you still see inverse correlation between euro-dollar and S&P 500, or is it not working anymore? I see more of a fundamental correlation between the stocks in the Eurozone and the euro. If the ECB prints more money, it weakens the euro, but helps European stocks. We've seen that yesterday. European stocks surged, and the rumors that ECB is going to do a bit more than expected. Regarding this, the S&P, it's a bit more complicated. It depends a bit more on the Fed, and there's more of a correlation between S&P and dollar yen. So currently, we're at S&P. We're relatively high, 2094. Lines to watch are, of course, the extremes here. We've seen it range down. Spoke with Dale on Tuesday around the GDP release, and we talked about, he talked a lot about the fact that when stock markets are high, the Fed is more hawkish. When stock markets are low, the Fed is more supportive. As they say, the Fed works for Wall Street. I think the Fed already did a huge preparation for a rate hike. That means stock markets will not crash in the United States. A question from Alexei to answering Fabian. From my point of view, technically there is Fibonacci correction around 50 points from the 1 hour chart. Draw a line from the highest wick and the lowest wick from yesterday. You will see the correction, but it can be higher corrections. Myself, I'm waiting to higher correction. Okay. Yeah, I don't follow the S&P quite closely. I mean, I do know what's going on in stock markets in general, but can't say I'm looking at all these correlations. Okay. More questions? Anyway, let's talk a bit more. Let's take another look at euro dollar. Getting closer to the lows, 106.03. Let's see if we have an extension of the move lower. Back to the previous lows. Yeah. In any case, tomorrow we'll do talk about, of course, what happened today, which I believe will be a bit about what happens tomorrow, which will be more interesting, and of course a preview for next week, which is huge. Okay. Okay, I see you guys answering each other regarding the lines. Question from Dylan: do you think Aussie Swiss is due to some topping action and some pullback? Let's look at the charts of Aussie Swiss. Remember, Aussie moves on China, on Australian news. The Swiss franc moves with the euro because of intervention. But this technical chart is not too shabby. As they say, we have some kind of support here at 73.80, and we have resistance on higher ground at right here, 74.20. All in all, it's trading in a high range. The trend is higher. The trend is high, remember, because of a currency that isn't here, because of the euro. Okay, so that's why we're seeing the trend higher, because the euro is falling. Euro falling means Swiss franc is falling. And the Australian dollar, we had reasons to be more optimistic in the past. Now, today we did get this terrible CAPEX report from Australia, and that weakened, of course, the Aussie dollar, but the trend, I believe, remains higher because of the euro. Okay, that's the fundamental trend. Lines to watch here are 73, 72.40, 71.60. Lines I've mentioned in the past. Let's, if we look to the upside, let's see if we have more interesting levels to the upside. Yes, we do. Yeah, so the 75 level is worth watching as well. 74.80, and then 76.70 and 77.50. So this trend beginning from early September, which goes hand in hand with the weakening of the euro, I believe it can continue. Okay. more questions, or we'll get to the wrap up quite soon. So we'll talk. Let's take another look at euro dollar. Yeah, as we speak, grinding the lows, dipped already this morning under 106. Round number, which doesn't mean that much anymore because it's been sort of eaten from all directions. Another question before we get to the wrap. I want to say, if we see daily chart, still room for correction to point to 110, I should say, but it is just pure technical. So if we take into consideration both the tech and the fundamentals, we can take our own conclusions, and the range that is up to every trader. Yeah, of course, there's always a potential of a big correction. The Federal Reserve might get cold feet regarding a rate hike, and that will, of course, hit the dollar quite hard and boost euro dollar. I see a very low chance of that, and a very low chance also of the ECB in general allowing the euro to strengthen. They want a weaker euro to lift inflation. They want a weaker euro to boost exports. That's their best transmission mechanism at the moment. They did manage to help loans. They did manage to help money in circulation. That's not enough. Governments, in my opinion, should do much more. But if governments don't do so much, the ECB's best way to support the economy and to reach its mandate regarding inflation is a weaker euro dollar. That's why 110 possible, but unlikely. Fabian says the reasoning behind euro dollar and S&P correlation. What was that? If international investors want to invest in a rising stock market, they have to buy US dollars, and raising its price as a result. Yeah, the euro dollar goes down. Do you agree with this consideration? If they want, yeah, but you're assuming a rising stock market in the United States, and the picture is quite mixed over there. So I believe that a rate hike could depress or at least limit any gains in the US stock market. Okay, so there are also other stock markets. Remember this correlation. If you have the ECB printing money, money goes to European stocks, and that also attracts money to Europe, to European stocks. So on one hand, it weakens the euro. On the other hand, it pushes stocks higher and attracts money to the eurozone. So yeah, it's not one-way street. We've seen that in the past year or so. European stocks will bid. So yeah, of course, there are lots of other considerations in stock markets, individual stocks, politics, things like that. For instance, here in Spain, we have elections in a month, so let's see what gives. Okay, so it's time for the wrap up. This is the wrap up for the live market open on Thursday, November 26th, Thanksgiving Day in the United States. Quiet markets are awaiting us, and we can have very thin trading and an occasional spike that could break technical levels, only temporarily, only a temporary breach. So be careful out there. Boredom most of the time, but you could have some action. Yesterday we had a lot of actions. The main event was the reports coming out of the ECB, rumors, leaks, depends on your point of view. Anyway, they talked about a two-tiered negative deposit rate, complicated to implement, but it's already been done in Switzerland, and could make things, of course, more, could weaken the euro. Broadening QE by buying municipal bonds. There were no numbers, but we did have this poll from Reuters saying that most economists expect negative deposit rate to fall 10 basis points to minus 0.30, and QE to rise from 60 to 75 billion, basically 25% raise in monthly bond buys. This hurt euro dollar, which fell to eventually to new lows at 105.66, fell from higher levels, fell over 100 pips. It then managed to recover thanks to some profit taking and thanks to sort of mixed US news. Okay, we had a big bulk of events in the United States yesterday. Durables, good orders, beat very nicely with 3% rise and a nice core figures, upwards revisions. Good data also came from jobless claims at 260,000. On the other hand, the core PCE price index, the Fed's favorite inflation measure, remained 1.3, quite mediocre. New home sales also mediocre, 495 within expectations, and the consumer sentiment already disappointed, being revised lower. So it was sort of good enough for a rate hike, but nothing to be excited about. In other developments, we had UK autumn statements relatively positive, supporting the British pound, helping it recover. New Zealand trade balance showed a deficit, but it didn't. It was more or less as expected. The Australian dollar was already hit by a big drop of 9.2% in capital expenditure, or capex. Okay, today we have Eurozone monetary data at 9. No big changes are expected. A drop is expected in German consumer sentiment. More importantly, we have Japanese inflation data at night. It's expected to show no real threat of inflation in Japan. Early tomorrow, we have German import prices. And at 8, just as the show begins, the flash CPI from Spain, first country to release figures for November. It begins the cycle. We have next week inflation figures from Germany, and then for the whole Eurozone, and this of course feeds into the ECB decision next week, which is huge. Okay, let's look at a few charts in the wrap up. Euro dollar range 105.66 to 106.30, currently leaning a bit lower but not going anywhere fast. Pound dollar a bit sliding as well, stronger US dollar, but it has recovered from the lows 150.60, 151.15, and 151.60. Bank of England was relatively dovish this week. Dollar yen sliding from the highs. It found this double bottom support at 122.20. Very strong resistance at 123.60. On the way, we have 122.80, 123.20. The Canadian dollar enjoying some recovery in oil prices thanks to the Saudis talking about coordinating prices. So 133, very round number. Ranges 132.80 to 133.70. Wider range, wider to the downside 132.40 and 131.80 to the top side 134.60. Aussie dollar bounced at resistance at 72.80. Weak capex weighs on it. Support line to watch 71.50, a clear separator of ranges, and below 70.65. New Zealand dollar 65.90 at the moment, resistance at 66.15. So remember, once again, we have a very light trading day today. It doesn't mean we won't have action. Rumors, leaks, interviews, breaking news from the Middle East like we had this week during the show. And, well, that's it. I see we have more comments here from Alexei. Agreed with Yohay 100%. You're right. That points out towards the strength in US dollar. Thanks. Thank you for the kind words, Alexei. Thank you, everybody, for coming to the show. We'll be here tomorrow with a preview of next week's events. Last week, we began with these kind of previews, and we found out that they were quite popular. So I thank Mauricio of FX Rate for this great initiative. Okay, so thank you very much, everybody. That's it for today. Wish everybody a safe and successful trading day, and see you tomorrow. Thank you. Bye-bye.